Corporate social responsibility, Module 3, communication and transparency. As we have seen in the first section, one of the main characteristics of CSR is to carry out a series of actions and good practices in order to obtain a good reputation, whether direct or indirect, from all its stakeholders. The topic that we're going to discuss here is vitally important, since we will talk about business communications, both on the internal and external levels, as well as transparency. Those concepts will help a company to build a good image, which nowadays is the key to success. If we take a journey back in time, we will see that we will deal with two concepts that are not recent. It is worth noticing that transparency derives from the application of the Kantian advertising principle, which marked the transition from the absolutist state to the rule of law. All actions concerning the rights of other men, whose maximum cannot be published, are unfair. We have also seen how the credibility and social legitimacy of a company or organization are based on its responsibility, that is, its ability to publish and respond to certain social expectations of its shareholders. Thus, transparency or accountability is the ability to respond to requests for information from increasingly demanding citizens with the social role that a company must fulfill and its own commitments. And this transparency is not limited only to the publications of internal bulletins, registers of chambers of commerce, official state gazettes, etc., but must comply with the following requirements: true and complete information. Information published must be true and complete, including not only the good, but also those aspects to be improved and that a company is committed to achieve. The information does not have to be only financial and accounting, but must also cover aspects related to corporate social responsibility, and such as the company's philosophy, environmental impact, promotion of human rights, etc. It must be comprehensible and intelligible information. When publishing certain information, such as the annual accounts, it is not enough that this information is understandable only by specialized auditors, but the company must adapt the financial information to the average level. Otherwise, we would be talking about an incomplete transparency, since what a company publishes would be valid only for experts, and its scope would be very limited. Public and easily accessible information. The general public should be made able to easily access all the company's information, since it could not be restricted to those circuits that are legally or professionally required, such as registers and bulletins, and be extended to other communication channels of greater impact or multiplier effect, such as the corporate web pages, newsletters for clients or partners. And it should be noted that the well-used transparency and communications policies facilitate dialogue with stakeholders and open the company to public scrutiny, an action that usually increases the public's trust, whereas the lack of transparency and erroneous communications generates mistrust, since the citizen consumer tends to think that a company has something to hide. Misuse and exclusively instrumental use of or fraudulent use of transparency could discredit the company's reputation, one of the most valued and important intangibles of the organization. To manage transparency completely, 5 basic tools are used. Here they are. The ethical code. It is an explicit manifestation of the commitments and positioning of the company in terms of the social and ecological responsibility. The CSR reports, sustainability reports, or other internal documents. The ethics committee, involvement in the ethical management of the different social partners. The ethical audit, instrument of evaluation and analysis, which verifies whether a company fulfills its obligation. The triple income statement, term related to sustainable business that refers to the performance of a company reflected in 3 dimensions: economic, environmental, and the income. Next, let us see the main characteristics of these management tools. The ethical codes. Let's look at those first. These are voluntary documents, meaning that they are not legally required. They are composed of ethical and moral rules, principles that define the meaning of an institution, guild, or sector based on a series of guidelines and points of reference for proper functioning. They often receive names such as Code of Conduct, Code of Good Practice, Code of Good Government, or Deontological Code, among others. And there are 3 types of ethical codes. A professional, which is often called deontological. It is a document that includes quite a broad set of criteria supported by deontology, with norms and values formulated by those who carry out a professional activity effectively. These codes deal with the ethical aspects of the profession that they regulate. Sectorial. These codes specific to the business sector, industry, or the activity, they define good practices applied to that sector, enhance synergies and cooperation in order to save costs derived from distrust, and show how to avoid those practices that can generate a bad image of the sector and are mandatory only for companies that voluntarily adhere to them and sign them. Business. They are codes that define the common project of a specific company or organization. This is most common ethical code, so we will see in more detail what it is and what are its main characteristics. Then we come to the business code. As we've just commented, this type of code is specific to the company or organization and has two clear purposes. Its function is to make known the personality of the company, its character, commitments, projects, and interest groups. The differentiation between other companies. It should be noted that this code is the letter of presentation of a company and therefore reinforces those aspects to which a company is committed and which generate good reputation and image, issues related to environment, gender, disability, cooperation, etc. Garcia Echeverria talks about the division of three sections of the business code. Business or organizational philosophy talks about the economic and social place the company currently occupies and the one that it wants to occupy in the future. It is also presenting the general goals set by the company to achieve a good position in the market. The business culture presents the values and norms that this company or organization has based on and inspired by its business philosophy. Often it is flexible with wide space that allows and facilitates its adaptation to variable contexts. And the business policy defines what should be the general lines of action and what should be the organizational structure of the company. Now that we have seen the structure and objectives of the business code, it is important to take a look at its advantages and disadvantages. As advantages, we can highlight how it helps us to get to know the nature of the organization and allows studying of the coherence of it, and it builds reputation of the company and its credibility. And it facilitates a business culture oriented towards dialogue, and it helps employees decide for themselves and increase their ability to respond to problems. It does not give answers, but it helps to respond. It facilitates the reception of new employees and increases the loyalty and motivation of existing employees. And it does not create a brand image, but a corporate or institutional image. But now we come to the disadvantages. We have to emphasize as an isolated code, it does not guarantee anything since it must be part of an ethical intervention program. It's difficult to apply since it is understood as a catalog of prohibitions or as a complementary penal code. It is generalist, voluntarist, and impractical. It lacks control and sanction mechanisms. Now we come to the ethics and CSR committees. It is a multidisciplinary group who represent the different legitimate interests and sensitivities across the different interest groups that affect or may be affected by the company. It is a participatory way of applying, monitoring, and evaluating the CSR policy of a company or organization, and its main functions are the development and monitoring of a corporate code of ethics and CSR policies, supervision and advice in solving problems and moral dilemmas, reflection and analysis, identifying important ethical issues, anticipating future ethical problems, developing and recommending actions, guidelines for conflict resolution, formulating guidelines and codes of good practice for problematic situations. Then we have monitoring and control. Monitoring the commitments acquired by a company or preparation of an ethical audit, supervision of the company's ethically relevant decisions and making value judgments. Then we come to intervention, solving in a rational way that conflicts of values that have arisen, acting as a mediator in case of conflict between groups, training in ethical issues, sanctioning capacity. And finally, it is important to point out that the implementation of the ethics committee in a company or organization entails some difficulties, and the most important ones are participation system. The economic, business, and political elections, majorities, etc. Scenarios tend to be confused. In a company, there are asymmetric power relations aimed at efficiency, and therefore it is not required nor expected that a company will import parliamentary participation or democratic measures. Legitimization to participate. It is impossible to manage trust in a company if we do not involve all the stakeholders. The difficulty lies in knowing how to identify them without excluding any of them. The criteria that are used to identify them are: they must not be part of the current management of the company and naturally represent their own interests. They must be plural when taking into account the different points of view from which the situation can be analyzed. They must have the ability to argue. Every dogmatic position in general is generally based on a position of power, but this is not the case of the ethical committees, whose members must be able to inspire a behavior, and they should not be potentially harmful to the survival of the company. Now we look at CRS reports. As we have seen throughout this section, the transparency exchange of information is an essential part of CSR. A CSR report is a clear expression of transparency on the part of companies, since publicizing the situation and activities of a company or organization give it credibility and rigor. Let's see now what the objectives of writing a CSR report are. Public commitment with stakeholders. This report publishes the evolution and fulfillment of the promises of a company, as well as corrective measures and deviations that are carried out to achieve what is promised. Decisions drafted must be justified. Facing the demands of the market, the number of responsible consumers has been increasing during the last years. This requires company transparency, not only in economic terms, but also social and environmental ones. The consolidating business confidence from an internal and external perspective, facilitating the integration of CSR in the company's management, establishing monitoring indicators, facilitates and promotes the integration of business management. Although the values tend to be intangible, we must not forget the intangible management is possible. And there are several types of report whose character and function, as well as the issues addressed on them, depends on the company and the number of interested parties to whom the report is addressed and the number that is this company has set. We often talk about flexibility when preparing these reports, as this helps each company make a customized report, adapting it to the needs, objectives, and types of business. However, it is important and necessary that it is to some degree of coherence within certain sectors or similar companies if what they intend with this report is to present a comparative and credible analysis of their results. This is when it becomes necessary to develop a greater consensus on the type of information that should be included in the reports, the manner in which the information should be written, the analyzed and presented, and the reliability of the evaluation and audit procedures. We will see below models of reports that are currently used, and we will study in more depth the most relevant ones, the sustainability reports. Sustainability reports, according to GRL, although there are many other models of CSR, we will focus on reports based on the Global Reporting Initiative, GRI. In relation to this topic, in the bibliography, you will find references to access the following documents: the guides for the preparation of sustainability reports, sustainability report of the certain company in 2015. GRI was founded in Boston, USA. Its roots lie in the U.S. nonprofit organization, Coalition of Environmentally Responsible Economics, and the TELUS Institute, the United Nations Environment Program, UNEP, which are involved in the establishment of GRI. Subsequently, new stakeholders from business world have been incorporated, such as the union members, NGOs, county advisors, universities, etc. Well, in the beginning, it was a memory of a financial nature, but in recent years, companies have been asked to present non-financial reports, thus integrating social, human rights, labor, and environmental aspects, among others. The GRI sets out 11 criteria to take into account when preparing a good sustainability report, which can be subsequently evaluated through 50 indicators that guide what a good report should contain. Here are the 11 criteria: transparency, inclusion, auditability, completeness, relevance, context of sustainability, accuracy, neutrality, comparability, clarity, opportunity. Now let's look at those in detail. Transparency. The report will be credible as long as it includes full recognition of the processes and procedures of its preparation. Inclusion. A company or organization must engage its stakeholders in order to help define and improve the quality of their reports. Auditability. The data and published information should be recorded, compiled, analyzed, and known so that the internal and external auditors can attest to them and prove their veracity. And then we have completeness, all the information that is material for the users to evaluate the report of the company, environmental, economic, and social performance of the organization. Company should appear in the report in a manner consistent with the limits, scope, and period of time. Relevance. It is the degree of importance that is assigned to a particular aspect, indicator, or piece of information, and represents this threshold at which the information becomes very much sufficiently significant to be made known. Context of sustainability. Company or organization must place its actions in a broad context of ecological, social, or other limits, where such a context would add representative meaning to the information offered. And it should be noted that the context is very important when weighing the real impact of the special actions. Accuracy. The principle refers to achieving the degree of accuracy and low margin of error in the information offered so that the users can make decisions with a high degree of confidentiality. I would say that word should be confidence, but anyway. Neutrality. The report must have a neutral character and avoid particular or partial attitudes in the selection and presentation of information. In addition, a company must strive and present a balanced report for its business performance. And comparability. The reporting organization must keep records of the limits and the scope of its reports, including any changes, reestablish and put the information previously provided in the correct place. And clarity. The company needs to make an effort to get to know the needs and origin of its stakeholders and must present the information that adapts to them. And number 11, the opportunity. Report should provide information on a regular calendar that meets the needs of individuals and on their actions related to the nature of the information itself. Finally, we should mention the reasons why companies prepare these sustainability reports. improving understanding of the risks and opportunities that are faced on a daily basis, improving the reputation and loyalty of the brand, facilitating stakeholders' understanding of performance and sustainability, highlighting the relationship between financial and non-financial performance, influencing policies and long-term management strategies, as well as business plans, comparing and evaluating sustainability performance with regard to what established by law, codes, norms of operation, and voluntary initiatives, demonstrating how the organization exerts influence and is influenced by expectations related to sustainable development, comparing performance internally over time, as well as the organization in complying with national regulations or with the requirements of the stock exchange. And here ends part 1. Corporate Social Responsibility, Module 3, Part 2. Standard SGE and 21 of Forestia. This is a private quality standard based on ethical management, and although it is of great interest, it has not been implemented on a large scale. It is led by Forestia, an organization that is linked to large consultants and experts in quality issues since 1999. Currently, it has only been implemented to a small degree. The main commitment of this standard is continuously improve the business quality system. Therefore, Forestia, as well as the companies that implement it, continuously review, audit, and improve the standard. Within the company, a series of internal auditors are appointed to evaluate and verify compliance with the standard. They also make reports and improvements plans that are forwarded to the Social Responsibility Committee. On an annual basis, there's also an external expert who carries out this review, which can be done through an audit or a conformity assessment. And the management areas that are based on the SGE 21 standard are as following: high management, customers, suppliers, contractors, human resources, social impact, environment, investors, competition, public administration. And the application of this standard by companies is completely voluntary, and if the requirements are met, the certification of ethical management and social responsibility can be obtained. The advantages of obtaining such a certificate are the following. The certificate demonstrates to the different stakeholders the real commitment that a company or organization has to the management of the corporate social responsibility. Maintaining the certification periodically and passing the annual external audits contribute to the continuous improvement of the products and activities of the organization, as well as the responsibility, commitment, and motivation of the team. This certification can improve overall performance, reduce mistrust, and expand market opportunities, reducing the risks in the operation and the activities of the company or organization. It means being part of a group of organizations that is a pioneer in the integration of CSR into the strategy and management of the organization, thus promoting leadership and reputation in terms of the CSR. It proves that it provides traction, which translates into loyalty and retention of customers, suppliers, employers, and investors. It strengthens the image of the organization, thus contributing to the linkage of the brand with ethical management and CSR. Regarding Forestia, students can find in bibliography a link to the last report, Conscientious Citizens, Sustainable Companies. It offers information on the real situation of companies in terms of the CSR, as well as the assessment and opinions of users and consumers. The report of the Fundación Leilata, the last report that we are going to analyze, is intended for organizations belonging to the third sector, that is the NGO, non-governmental organizations and non-profit organizations. And this analysis has some organizational and bureaucratic elements based on the information provided by the organization being analyzed itself. It should be noted that in the same NGO, by its own will, that requests be analyzed with the intention of improving certain aspects of the administrative nature, which are analyzed by the Fundación, I imagine that means Foundation, Lealtad in Spain. The Fundación Lealtad, excuse the bad pronunciation, is a pioneer non-profit institution in Spain, especially established in 2001 with the aim of promoting trust with the Spanish society and NGOs so as to achieve an increase of donations, as well as the other types of collaboration. The Fundación assumes that there's great distrust of NGOs because the designation of their funds and the impact of the activities they carry on are often unknown. In order to end this distrust, the Foundation carries out an annual analysis of some of the Spanish NGOs based on the 9 principles of transparency and good practice. Here are the 9 principles. The principle of operation and regulation of the governing body. The highest governing body of the organization must assume its responsibility, since its members are responsible for ensuring compliance with the aims and objectives of the organization, as well as the efficient and honest management of its resources. This principle recommends active participation in meetings and involvement in the planning and design policies and strategies. Principle of clarity and publicity of the organization's mission. This must be clear, public, and identifiable, a social purpose, since this is vital when making strategic decisions, designing programs, motivating workers, and attracting potential collaborators. Thirdly, the principle of planning and monitoring of the activities. The organization must be able to show in writing the objectives it wants to achieve and what actions it will take to achieve them. This principle also implies the existence of internal systems of evaluation and improvement of results. These documents are an essential tool when it comes to demonstrating the social impact of their activities and actions generated. demonstrating the social impact that their activities and actions generate. Number 4, a principle of communication and truthfulness of the information provided. What is necessary are concrete actions that allow the organization to communicate with society and thus seek mechanisms to receive a response according to the foundation. This principle is one of the clearest indicators to see to what extent the organization is in contact with society and its real needs. The principle of transparency of funding. One of the main reasons for the distrust of society for NGOs is a lack of knowledge about the means of financing that they have. Therefore, it is essential that all organizations report in a clear and transparent way how they are financed and where the donations they receive end up. And then we come to the principle of plurality of funds. The principle contributes to the search for diversification of financial sources that ensure, as far as possible, the independence and continuity of the organization. The principle of spending of the funds. Among the objectives of this principle are to publish a distribution of what is really spent on management and direction, activities and attracting resources, and to promote the idea among the public that the best way to ensure the funds are really applied where they should be is to have a structure sized according to the type of activity that is carried out and to have qualified professionals. And it should be mentioned that the presentation of the budget is not a legal obligation. However, it is considered a fundamental management tool since it helps to avoid unnecessary risks and plan the activities in a way that are consistent with the existing resources as well as the design of a fundraising strategy according to the needs of the said organization. And both this and the budget settlement are descriptive documents in the real priorities of the company. The principle of annual reporting and the compliance with legal requirements and the degree of ignorance of the organization's legal obligations covered by law 49-2002 is quite high, as well as the exhaustive controls carried out by the public administration on the expenses that are covered with subsidies. Thanks to the application of this principle, the public knows which are the documents that the organization drafts to report to their management, and they are, in a great part of the case, audited externally. The principle of promotion of volunteering. One of the main indicators of the organization's social impact is the number of volunteers it has. These are people who live in a day-by-day of the organization, and this makes them the best guarantee that the altruistic contributions made, both money and time, are invested in social purpose. Finally, the report of the Fondation et l'État is one more instrument of the many that exist in the field of communication and transparency, and has less scope and depth than the external audits of economic and financial aspects of the NGO, not only in Spain, but in all those countries in which its projects are developed. Thus, we can conclude the reports of the Fondation are a good complement to the audit or sustainability reports, but should not be interpreted as a comprehensive CSRO. Now we come to ethical and CSR auditing. Now, the Cambridge definition of that, Cambridge definition of that is defines audits as making an official examination of the accounts of the business and producing a report. Thus, and in the following definitions, we can establish that the ethical audit is a system of accreditation on the behavior and ethical responsibility of a company or organization in its environment. Not only does it deal with the economic issue, but it also includes ethical and moral characteristics that a company establishes voluntarily. The audit has its origins in social balance, defined by Garcia Echeverria as the effort to describe its internal and external reports as much data as possible about the benefits and costs that business activity entails or may bring to society in a given period, and it accounts for the social benefits offered by the organization after deductions of the social expenses incurred. However, the problem arises when quantifying social spending economically. As an example of this would be the donations made by the companies, which can be public or private organizations. The question is whether these donations at the level of social spending are worth the same. Now, due to the short history it was born in the welfare state, social balance has two important weaknesses. Confusion between public responsibility and private responsibility. A company complies with laws and pays taxes, and it is the state that has to deal with the social part. Or a dual conception of a company that is understood as integrated in internal stakeholders, workers, owners, and managers. It is considered the external stakeholders, consumers, competition, pressure groups, etc. belong to the state level. These beliefs clash with current perception, according to which the public is no longer only the responsibility of the state, but companies must comply with that responsibility to society in general, being socially responsible to their whole. Thus, we can establish the ethical audit is a logical and extended evolution of the social balance, represented by sustainability reports. The balance declared and the audit verifies and certifies that the statement is true. The audit facilitates the ethical assessment of the company, since it measures the distance between the expectations and the promises that a company has made and what a company has really achieved during a period studied. The difference between expectations and results gives us the social legitimacy of the company organization. And when preparing and writing an ethical audit, a company must comply with the following phases: determining the different stakeholders to whom it is directed in order to facilitate dialogue, as we have seen when we spoke to stakeholder approach. To achieve this, it is advisable to discard the dual conception of company, internal stakeholders, business workers, and be based on a pluralistic model that also includes external stakeholders. Identifying the legitimate interest that each one of the concerned parties defends. We must bear in mind that regardless of the specific interests that each group may have, there is also general interest common among any group. The minimal values must be respected, which is in many cases are defined by the constitutional framework and by the Universal Declaration of Human Rights, as well as the dignity of a person, equality of opportunity, and freedom of a person, among others. Business dialogue is the basis for the identification of meeting points between the different groups, specifying these interests in the form of systemized and measurable indicators for their control and subsequent evaluation. And now, the indicators. The objective or operational indicators can be analyzed and verified by external observations, monetary DOS. Interval scales, they are quantitative indicators. And then subjective or perception. And these indicators are measurable through interviews, surveys, polls, and discussion groups, among others, and they are, of course, qualitative aspect. Currently, there are a few companies that perform ethical audits. One of the foundations dedicated to this work is the ETNOR Foundation. The triple bottom line. This concept, known as the triple bottom line, or TBL, arises from the need of companies and organizations to publicize their concerns and all the actions they carry out on social and environmental issues. The term dates back to the mid-90s when a group of accountants began to use it in their work. It is a practical part of it is used to identify a series of values, especially investments and processes that the company must carry out to minimize any undesired results, as well as to create economic, social, and environmental value. In short, its purpose is to collect information on the different activities and actions so as to reach all of its stakeholders in a transparent manner and thus build a good image and reputation, giving the company an edge over its competitors. It is a term dealing with sustainable business that is concerned with the performance of the company expressed in three dimensions: economic, environmental, and social. There's your three triples. Okay, there's your triple. Triple bottom line refers to the net result expressed in the last line of the statement of the accounting results. In addition to the statement of income, the evidence of performance in relationship to the triple structure is manifest in sustainability reports or corporate social responsibility. Ideally, a company or organization with a good performance in triple result accounting terms would obtain, as a consequence, the maximization of its economic and environmental benefit, as well as the minimization or elimination of its negative externalities, emphasizing the responsibility of the organization to its groups of stakeholders, not only to the managers and shareholders. And it is important to note that a sustainable company is the one that, in addition to making money, takes care of the way it does it. It has a long-term vision in which the company not only considers its shareholders and employees, but also takes into account the environment in which it carries out its business activities. And this translates into a triple income statement, which is not only economic, but also environmental and social magnitudes must be included. These results are presented in the corporate balance sheet of companies committed to sustainable development, and they are voluntary. The origins of the triple bottom line is in Europe, although over time it has become adopted in the United States. Currently, it is thought that in Western Europe, 68% of the multinationals consider its development, and although in the United States the figure is lower, 41%, the growth is considerable. Finally, and it is important to highlight the existence of the worldwide initiative, the Global Reporting Initiative Guidelines. Since 1998, GRI issued guidelines on how companies should report on their environmental social commitments. During the 1998 to 2000 period, about 150 companies from around the world joined the initiative and developing sustainability balances based on guidelines set out on the guide. Application: designing a CSR activation program. As we have seen in previous sections, there are a whole series of norms and management frameworks that allow a company or organization to integrate social and environmental considerations together with the participation of stakeholders in the decision-making and operations in the company. It is a series of internal tools for companies and other organizations to integrate their values into daily practice. Thus, it could be understood as a set of procedures, steps, and specifications used by a company or organization to manage a process or activity. These standards must provide an organization with a model to follow in order to establish and manage a management team. The aim is to apply these standards throughout the world and to represent innovative management frameworks through which companies can be certified. And in this way, there are process standards, which focus on the types of process and execution steps, and performance standards, which encompass measurements and the information on performance and evaluation. In this way, we can say that these management systems help improve the strategic management of CSR, as well as the performance responsibilities and credibility of the company, and it helps identify and effectively manage social and environmental risk, involve stakeholders more actively, and boost overall organizational effectiveness through meeting and analysis of information on operations and impact for better coordination among departments. And it can be a useful reference and communication tool when it comes to management performance. They are voluntary, and their success depends on the acceptance that they have in the market. When implementing these CSR norms or policies and responding to the social problems, a company must be guided in the following phases. First phase: once the responsibility has been identified and evaluated, policy to be followed in this matter must be defined by the management. Dialogue with the stakeholders is fundamental, since the opinions of these will help the company to design the action plan. In addition, it is advisable to create an ethics committee, as well it will facilitate dialogue, the creation and revision of the code of ethics. Companies often already have an ethical code, and this is the first step the companies take to show their concern about the environment. And it is vital that workers and groups that are related to the company or organization know the values and ethical principles of it. And in the second phase, this should consider technical aspects of each of the needs, the design of the data system and interpretation of the environment, and the preparation of information systems in order to develop a good action plan that suits the needs of the stakeholders. And the third phase, the last phase, is characterized by involvement of management to achieve the commitment of the organization, generating new expectations and causing a response of the operating units. And the structure must understand and accept its involvement in CSR as a direct problem, as well as to increase the response to its legitimate demands that are made. For the implementation of this CSR strategy in a company, 4 basic aspects are required. Company culture, inclusive traditions, customs, and shared values. The management of the company has several means to foster a climate of tolerance, respect for social values, and legitimate interests of different interest groups. These include the manifestation of true commitment through concrete social actions and the organization of training programs for all members of the company and organization. When we come to the organizational structure, it is very important that all managers of the operating units, however small, are aware and act with total coherence. Their example is essential, and their unethical behavior or non-compliance with the established objectives will generate a strong response from management. It is simply a relationship of coherence between what is said and what is done. And then we have monitoring and control. At all times, clear and transparent evaluation criteria must be available. Given the existence of existing vagueness and diffuse limits of the scope, it is essential to be able to justify the actions undertaken in a favorable and common benefit. At the same time, the follow-up of the actions carried out must allow not only introducing the corrections with the classical cycle of continuous improvement, but also motivating staff by means of their achievements and the quality which has to be done. And it is essential to use quantifiable indicators such as the social balance models given here. Communications with the public about social action. When communicating, a whole series of transparency, truthfulness, and criteria must be followed. What is required is specialized communication, which enables the use of a variety of tools available in order to share experiences and facilitate the multiplier effect. It is about satisfying stakeholders, building trust, and enhancing the corporate image. The annual report can be a good document to publicize the information internally and externally. And to finish, and to get a better understanding of the steps to follow when preparing an action plan for CSR, it is advisable to see the graph presented by Forecchia in 2006, which points out the different phases of preparing action plans.